All right, some absolutely massive financial news just dropped that could literally change the way Wall Street works. And right now, we're going to break down exactly what it is and, more importantly, why you should care.
Okay, let's just dive right in. The overall vibe, the excitement around this whole thing, it can pretty much be summed up by this one quote. You can just feel it, right? A huge domino has just tipped over.
So here it is. This is the headline that's got everyone talking. The SEC, the big regulator in the U.S., has officially given the green light to a company called the DTCC, and what they're doing is turning regular old assets, stocks, bonds, treasuries, into digital tokens that can live on a blockchain.
Now that little acronym, DTCC, is the absolute key to this entire story. To really get why this is such a monster deal, you first have to understand who these guys are and the massive role they already play behind the scenes.
And yeah, I know exactly what you're thinking, because it's the first question on everybody's mind. What on earth is the DTCC, and what do they actually do all day?
Well, if you go and look up the official definition, you get this: a mouthful of corporate jargon about clearing, settlement, and custody. Not super helpful, right?
So let's use a much better analogy. Just think of it like this. If every single stock or bond was a car, then the DTCC is the company that builds, paves, and maintains all the highways. They are the essential plumbing, the core infrastructure that lets trillions, with a T, of dollars move safely through the financial system every single day.
Okay, so we've established the DTCC is the official highway builder. Now let's talk about why their direct involvement is such a complete game changer. And it all comes down to fixing a huge problem with the old way people tried to do this.
See, before this big decision, if you wanted to trade a stock on a blockchain, you were probably using something called a wrapped token. Basically, some third-party company would go buy a share of, let's say, Apple, and then they'd issue a kind of digital IOU, a representation of that share on the blockchain.
And on the surface, that sounds like a pretty clever workaround, doesn't it? You get your stock exposure on a new platform, but in the real world, this whole method created some pretty serious problems.
These wrapped tokens created all these murky, gray areas. Suddenly, you had all these critical questions, like who actually owns the underlying stock? Who holds the legal title? If there's a shareholder vote, do you get to vote? Who gets the dividends? Every single platform had different answers, and it created this chaotic, unreliable mess.
And here is the crucial takeaway. The world of traditional finance, what they call TradFi, we're talking the big banks, the giant pension funds, they hate murky. They hate uncertainty. They need crystal clear, standardized rules for everything. Murky is a total non-starter.
And that brings us right to the solution. This is the new reality. This is the official version that this SEC approval finally makes possible. Because the DTCC is the official regulated plumbing of the whole system, the tokens they issue, they aren't just some IOU or a representation. They are the legal asset. And this gives those big TradFi investors exactly what they've been waiting for: a clear, unified, and totally official way to handle these assets on a blockchain. I mean, this comparison really says it all. You look at the left, the old way. Just a representation, a bunch of middlemen, unclear legal rights. It was murky and complex. And now, on the right, you've got the DTCG token. It is the actual legal title. No middleman, all the rights are included as usual. We've gone from murky to clear. Our source had this fantastic analogy for it. The old wrapped tokens are kind of like your mom trying to make a Big Mac at home for you. It's a nice effort, it might even look similar, but it's not a real Big Mac. The new DTCS issue token, that is the real Big Mac. And that's the bottom line, right there. One is an imitation, a representation of the real thing. The other is the official, standardized, authentic, real deal. And that difference is the fundamental leap we're all watching happen right now. So let's zoom out and just really take in the big picture here, because this isn't some small technical update for finance nerds. No, this has enormous implications for the entire future of the global financial system. So the crucial thing to take away from all of this is that this single decision just built the first major regulated official bridge between the multi-trillion-dollar world of traditional assets and the cutting-edge tech of the blockchain. It's a foundational piece of the puzzle for eventually bringing the entire financial system on-chain. This approval has basically opened the floodgates. It starts with stocks, bonds, and treasuries, but it creates the official blueprint for everything else. And that leaves us all with one massive, exciting question to think about. With the financial system now officially starting its move on-chain, what gets tokenized next?